A share of profits and retained earnings, decided and managed by board of directors of a company, paid to the shareholders, is called dividend. The shareholders are eligible for dividend as long as they own and hold the stock by the ex-dividend date. It may be paid out as cash, or in the form of additional stock. The annual dividend per share divided by the share price is the dividend yield. A dividend is a reward company pays to its shareholders for their investment in company's equity, and is generally derived from the net profits. A major portion of the profits is retained by the company, which is to be used for its current and future business activities, known as retained earnings, and the remaining profit is allocated to shareholders as dividend. Sometimes when a company do not make suitable profits, still make dividend payments to the shareholders to maintain their set track record of making regular dividend payments. Not all companies do so. High-growth tech stocks and biotechs reinvest in R&D to enhance their existing products, or create new ones that generate big sales. There are various types of dividends a company can pay to its shareholders. They include cash, a most common type of payment a company directly pays to its shareholders in form of actual cash. It's usually paid in form of cash, wire transfers, or check. Stock dividends are paid to shareholders by a company in the form of issuing new shares in the company, based on the number of shares the investor already owns. Special dividend, it is paid to the shareholders outside of the company's regular policy, i.e., quarterly or annually, etc., usually due to having excess cash on hand. Common dividend paid to common stockholders in form of cash or stock. Preferred, a dividend that is paid on preferred shares. Assets, a company may also pay its shareholders in forms other than cash or shares. It can be assets like physical assets, real estate, and investment securities. Payment of dividends leads to money going out of company's book and accounts, and is irreversible and hence impact the share price. However, dividend payments has a positive effect on company's reputation, and helps maintain investors' trust. A company making high-value dividend declaration indicates that it's doing well and has generated good profits. Conversely, a company with long history of dividend payments, if reduces its dividend amount, it may signal its investors that the company is in trouble. The depletion in dividend amount may also mean that the management of a company has better plans for reinvesting the money in its operations, or in a high-return project that can magnify returns for shareholders in the long run. Dividends are preferred by shareholders because it is a non-taxable income, unlike capital gains realized through sale of share at profit, which is considered taxable income.